I'm going to show you the best way to use the Bollinger Bands. Trust me, this method works and I made over 40 grand by using this strategy, and you can too, so listen up. So typically people look at Bollinger Bands lines and trade either the resistance or support. Once the candlesticks hit the upper band, it should be a sell, and vice versa. If the candlesticks reach the bottom of the band, you should buy. This is the very basics of Bollinger Bands. However, only trading like that will make you lose money. So if we have a look at this, as you can see, it shoots towards the upside, and nowhere over here it actually rejected properly off the top band. So this could potentially be a lot of losing trades, because you would expect the market to turn around, but it doesn't. It just continues to move up every single time. So I believe the better way to trade this is to wait for a cross of the mid-range line, which is the yellow line on the screen. Once we get that push, a break of the yellow line, a slight exhaustion, and a bearish engulfing candlestick as confirmation, we can definitely start looking for a nice trading opportunity. What's also important in this scenario is this upwards trend that was broken. As you can see, every single time it touched one of these area zones, it went towards the upside before reaching the top level over here and finally finding some sort of rejection past the uptrend that we just drawn with a bearish engulfing candlestick. Why would you want to enter on a bearish engulfing candlestick, and where is the target? Well, the target has to be the previous area of support. So this area zone looks pretty good. It could be this one as well. So let's just mark them. If we would want to short this position, let's say over here, let's do around 60 pips stop loss and take profit. We could do 2 to 1, pretty much somewhere in between the two supports. Seems like it could be a reasonable level to take your profit. So now let's quickly see what actually happened with this trade. It dips towards the downside nicely and reaches our take profit level. If it fully reaches your take profit level, you want to take your profit. However, you can maximize your pip gain by holding a trade longer, maybe closing 50% of your position. But let's see what actually happens. It goes towards the upside slightly and again gives us a bearish engulfing candlestick of the mid-range zone. So you could potentially be thinking to enter over here. But now I would like to ask you, is it worth it? Because if we just zoom in a little bit, we can draw the same trend line over here, but in this case, it hasn't really broken it. As you can see, if we just draw it, there we go. It's still on that uptrend. It's on the strong area of support just here and over here. We could be struggling with this trading position. So in this case, if you don't see a clear destination where the candlesticks will likely move, don't enter the trading position, because it could be a false signal or give you a false entry, which you do not want. So what happened with this trade? It actually dips down and reaches our take profit level once again, which is funny because I said we wouldn't be taking this trade, and 5 times out of 10 probably I wouldn't, probably I would. Really depends on other different conditions, such as where the overall trending direction actually is. I know for a fact that euro has been falling. It's on the 20-year low on the monthly time frame. So in this case, you could potentially think, yeah, it's fallen. It's likely going to the psychological level of 1.000. Are we there at the moment? Not yet. This is the line where the psychological level is. We're not there yet. Could be a pullback after such a push, because after a push, there's exhaustion. Push, exhaustion, maybe towards the yellow line over here could give you another entry opportunity. But as I said, this wouldn't have been as great of a trading opportunity as this one over here, because our first trading position would have given you a clear indication that it's going down. This one over here didn't. It gave us a bearish engulfing candle after the move actually happened, which could potentially mean a pullback and you get stuck with a bad entry trading position, which you do not want. I would like to now talk about some bullish trading scenarios, and look at this. Clear area of resistance. Every time it touches 1, 2, 3 level, it goes towards the downside, right? Clear resistance. Now over here, we are approaching the area of resistance. We are above the Bollinger Band upper level, which should mean that the market will likely go down. So let's see what actually happens. It does dip down slightly, gives us a nice little exhaustion. Should you have entered here? Probably not, because this area zone hasn't really reached its top level. I probably would have thought maybe it's gonna peak a little bit or maybe even break it. So as always, you want to be waiting for that mid-range zone breakout and then bullish or bearish exhaustion scenario. So let's see what happens. A nice bullish engulfing candle once again. Look, where is it bouncing? Off the middle zone, in between the Bollinger Band resistance and Bollinger Band support. This scenario over here is what I really like, because if we have a look, a nice 100 pips profit to at least retest the previous top level, and we can potentially just do stop loss 50, take profit 100. So 2-to-1 risk to reward ratio over here already. And this is a great trading scenario, because after the mid-range zone bounce with the bullish engulfing candlestick, likely it's going to retest the previous area of resistance that we have marked, right? We have a clear destination on where the market is likely heading. So if we have a look, the market does dip a little bit, but then continues to shoot up and reach our take profit level. Now, again, you can close off maybe 50% of your position, maybe 80%, and leave that 20% tickling a little bit more to maximize your pip gain. Maybe move stop loss to entry position for risk-free trading, or even trail your stop loss 10 to 20 pips at a time. So let's see what happens. It goes a little bit down and then goes back up. If it doesn't break the middle Bollinger Band line, it's a clear indication that likely bullish pressure will continue, and that's why you don't want to close off your full position straight away or too early, because you would be missing for these extra pip gains. And look at these 200 pips, obviously with much less lot size because you closed off 80%. Let's say if we kept 20, right? But still, you would have made so much more money just by holding the trade. And you can close it off now if you had enough of profit. As you can see, 250 pips, 260. But the main way to close off your trading position would be just a slight break of the Bollinger Band middle line. So let's see if we do get one. We have one over here, so we could potentially close off our trading position. So not too bad initially if you just closed off over here for 100, 2-to-1 risk reward. Pretty good, but you could potentially maximize it just by keeping the trade position a little bit longer and see where these candlesticks actually take us further. So here's a great example of taking it further. If we just long this position again from the mid-range zone, bullish engulfing candlestick, let's say we have our previous area sensitivity just somewhere over here. We can see the wicks. Let's say we mark it, area resistance. This is where we potentially want to kind of close off or maybe put some of our position just over here. That's where the top level of the Bollinger Band is, as you can see. So 50 pips, so let's do 52, why not? And let's say we take this trade 1-to-1 risk to reward, because we believe it's likely gonna retest the previous top, and the overall trend direction on the monthly, weekly, daily timeframes is towards the upside. So it just makes sense to continue trading bullishly. So let's see what happens. We are going towards the upside nicely and reaching our take profit low. Yet again, look, bullish engulfing candlestick forms and we break the area of resistance. So what we could do potentially is move stop loss to entry, maybe close off 50% of our position and ride this wave. It's very important, especially on pairs such as USD Japanese yen, where the trend is definitely your friend and you want to continue making money. So let's see what would happen if we kept this trade open, let's say 50% of our position. Look at this. It just continues to trickle up and it continues to move up every single time, and it never breaks the mid-range zone. So look at these profits. From a simple measly 50 pips profit that you first initially made, you could have maximized your pip gain with 300 pips profit easily by just following this trading strategy. As you can see, it never broke past the mid-range lines. It just continued to move towards the upside, which is what we want. And this is how powerful this trading strategy can get. And if we just continue trickling, look at this. There's no reason for us to close off our trading position if we are not breaking the mid-range line. And as you can see, if you see some huge volatile news, then maybe you want to close it off. Maybe you want to read on the FX Street just to prevent the news to screw your trade over. Probably, or most people would have closed off their position at some point. I mean, you cannot get overly greedy in Forex as well. I mean, from 50 pips trade, if you closed up the 50% portion, it's still 735 pips profit. You would have made a ton of money just by following this simple trading strategy with the Bollinger Bands. And even if you was greedy and if you just followed this trading strategy and it dipped down and you got scared, it's still 206 pips profit. So you're making money either way. You're risk-free trading and you could have maximized your pip gain this way. It's a very simple trading strategy, but it works good because it has great logic. So taking trades in the direction of a trend is super important. However, what's more important is watching this video next because it's pretty damn awesome.